Hello, Vidivia community. My name is Hammer, coming to you as I do each and every Wednesday with your mortgage market update. Today is November 22nd, 2023. Today's guest, Jason Sharon, a guy with a great name and a person I call a friend of mine. I've known Jason for years. Jason, please tell everybody a little bit about yourself.
Sure, great. Retired Navy, 9 years enlisted, 11 years commissioned, mortgage broker owner for the last 7 years, I guess, out of Charleston, South Carolina, just enjoying life.
Awesome. Well, thank you for joining us. Remember, everybody, if you're here this morning, you can go ahead and let us know that you're here. Just go ahead and put us hashtag live if you'd like. Let us know that you're around. I know it's the day before Thanksgiving, and most people are more worried about picking up those last minute items than they are about interest rates. But I know many of you do watch on the replay. And if you're watching on the replay, just let us know that you are here. Put a hashtag replay in the comments. If you have any questions about anything we discussed today, you can tag Jason or myself. We'll be glad to answer them for you as we get there. So all of that said, let's go ahead and start talking about rates, and we'll give you guys a heads up on where we're going there. Remember, it's not an offer to lend. When we talk about rates, we're talking about averages and generalities. You always want to make sure that you're shopping around and that you do shop your rates. So with there, let's go ahead and do a quick recap and talk about where rates have been recently. So rates have definitely dropped since the high point in October. About a month ago was when we saw some of the worst rates that we had seen. Conventional rates were up into the 8s. VA rates were in the high 7s, possibly even in the 8s for some people. At this point, I would say what I'm seeing, VA rates are generally back in the possibly mid to high 6s. Sometimes low 7s for, certain scenarios. If you're getting a rate in the 7s, though, you definitely want to be checking and seeing where, if you're getting a rate quote recently in the 7s, you want to find out what your situation is on that one. If you're getting a rate quote in the 6s, that sounds more accurate. What about for you, Jason? Do you think that sounds right for a VA loan?
Yeah, I think that's spot on. You're exactly right. That's exactly what I'm seeing. And I was pricing out loans this morning.
Okay. And then for conventional rates, if for any reason you're not using your VA benefit or someone is getting a mortgage and they're not a veteran, conventional rates are averaging in the mid to high 7s. And you can get some of the lower 7s right now, but you got to have stellar credit, not be putting too much down, but putting enough down. It's kind of a weird scenario. It used to be the more money you put down, the better your interest rate was. Now, not so much. Thank your government involvement on that one. It's a very weird situation. As far as where things are going from here, that's what everybody always wants to know. And they say, Hammer, what's going to happen to rates? Well, rates should definitely remain stable. The markets are open on Friday, and we could see mortgage rates move a little bit on Friday, but it's very unlikely. It's usually a very quiet day. Most traders are gone now for the long holiday. They'll be back on Monday. Things are pretty quiet for Thanksgiving. The week after Thanksgiving, we're not likely to see too much happen. We could see rates give back a little bit, meaning they could creep a little bit higher is generally what may happen. There's not a lot of economic data coming out that week. We've seen a lot of improvement recently, but overall, we're not going to see rates really move. And the week of December 4th, the first full week in December, that's going to be a very active week. There's a lot of economic data, a lot of labor market data. And right now, mortgage rates will improve if there's signs that the labor market is getting a little bit weaker. So when we get all this labor market data, and we'll talk more about it next week, that's where we could see an opportunity for mortgage rates to possibly get a little bit better if that data comes in showing labor market weakness. And then the week after that, on the week of the 12th, we're going to get inflation data. Actually, the week is the 11th, but on the 12th, we're going to get more inflation data, which that inflation data we talked about last week was why things improved recently. So we're going to get every month we get that report. So we're going to get the next CPI, Consumer Price Index inflation report. And the Fed meeting concludes on the 13th, and the Fed will release their policy statement. They'll let us know if they're going to raise rates, lower rates, where they stand on things. And then we'll have a press conference with Fed Chair Jerome Powell. And again, we'll talk more about this in the future. But what this basically opens up for us is that when we look at where things are at, the rates look very likely to hold steady over the next week and a half. And, we'll see some fluctuation. It's normal to see a little bit of movement from day to day, but rates really could improve in mid-December. And it's not that they will, and I don't have a crystal ball, but if we are going to see another drop in rates, anything more than maybe 0.25%, it's not going to happen until we get a lot of that data. So we'll be talking about that. As far as longer term, we're not going to see rates dropping to the 4s or the 5s or the 3s. You could buy your rate down with points. We've talked about that in the past, or we can highlight that again. But generally, your what we call par rate quote, or your quote for what a rate without buying it down, is going to be very much where it is now and maybe a little bit better. And we're not going to see that really drop until the Fed does start to talk about lowering that Fed funds rate in the future. So that's kind of where we are at. What would you add to that, Jason?
I think you're spot on. The only thing I would say is whenever you're shopping for rates and asking for rates, that's only asking half the question. Make sure you're asking rates and fees, underwriting fees, processing fees, all those fees in Section A of the loan estimate. If you're only asking a rate, you're only asking half the question.
And then now there's sometimes where people are gathering rate quotes, and it can really vary from day to day. Right now, I think there's a little less of that. If you got a rate quote yesterday, today's rate quote would be very similar. Whereas a week or two ago, we had such a big move in one day. If you got a rate quote on Tuesday, on Wednesday, it could have been 0.25% different. So always try to time your rate quotes. Look for them to be around the same time. If you're gathering them over the course of a week, sometimes you can get some real fluctuation in the markets, and that'll change your rate quotes.
Yeah, I completely agree with you. Yeah, fortunately, volatility has calmed down a little bit.
Yeah. And then what do you think is happening as far as the housing market? A lot of people are concerned that, housing prices are going to come down in 2024. There's a lot of press or YouTube clickbait on that. What do you think in your market? I know you're in Charleston, right?
So in my market, we're still hot. We weren't overly hot like some of the big areas like, Miami and Phoenix and some of the crazy places that were, 30% in a year. We stayed in, under 10 to 12. So we're still a seller's market here. I think the vast majority of the country is a seller's market. And I don't think that's going to change in our lifetime unless we significantly start building a lot more houses per year, which isn't happening anytime soon. So unless it's a market that has no jobs or a place that was super, super hot, I think it's still a slow, steady, nice return year over year.
Yeah. And then there's financial reasons to own a home, but there's also a lot of personal reasons. For me, sure. I want somewhere that I can paint the walls any color that I want, where I can change the fixtures and maybe make some changes to the house itself. And those are, maybe I want a backyard, maybe it's a certain neighborhood that I want to live in. These are reasons why it's always a good time to own a home, no matter about the financial side of it. But as far as the financial side goes, it's very, very unlikely that we see home prices drop, as Jason said, because of inventory. So inventory is the biggest issue. It's always supply and demand. If there's a lot of people that want something that doesn't have a big supply, well, that keeps the prices high. And when it comes to homes, we don't have a lot of inventory, even with rates being higher. And that's because people are golden handcuffed. There's a lot of people that are in homes at very low interest rates that they just don't want to or can't afford to move out of. That could change if we see rates drop significantly. I would say we need to see rates get into the 5s to see people that are in the 3s start to really move again. What do you think on something like that?
Yeah, I haven't analyzed what value or what rate would get there, but yeah, you're 100% right. I mean, we only build 1.4 million houses in America per year across the country, and we have 2 million to 2.5 million people turning 33 that want to buy houses every year. Yeah. We just haven't built enough houses just to support just normal birth rate growth, in decades.
And a lot of people, they say, well, why is that? Now I'm in an area called Waynesville. It's outside of Asheville, North Carolina. And everybody that lives here that's not me hates the idea that we build anything. We built some apartments. People are mad that the apartments are being built. We're pulling these people in from all these other places. We build houses and they complain, oh, that used to be a farm, 80 years ago. Now there's how nobody wants houses. They love where they live. They love these different things. That's part of it. Regulation is part of it. There's not enough tradespeople. We had in 2008, we had the great housing crash, and that pushed a lot of the tradespeople out. And there's still a vacuum, so all of these reasons, like Jason said, there's not enough houses being built. So you've got that is one problem. We've got not enough people moving. We have people aging in place, whereas people used to die faster. I don't want to be, mean, but the idea was you retired at 62, you were dead by 65. That was how the math used to work. Now people are living into their 70s and 80s and living at home. And that means that those houses are not part of the, normal ebb and flow of homes. So.
Yeah, you're exactly right.
Yeah. So, well, happy Thanksgiving to you and yours. I'll chat with you a little after we're live. Is there anything that you want to add for everybody that's watching or may watch on the replay?
No, I would say, we as a Vet VA community are very thankful for all of our members. We appreciate each and every one of you, what you give, what you bring to us, every post, every comment, makes us feel a little bit more fulfilled that what we're doing is helping. So thank you very much for being a member.
Absolutely.
And thanks for being a part of the community. We really appreciate you as well.
Oh, yeah. Thank you. Yeah, no, it's always my pleasure. So remember, y'all, we will be here. I'll see you next week. You can join the same time. It's 12 p.m. Eastern, 11 a.m. Central, 10 a.m. Mountain, 9 a.m. Pacific. And that's it. I'm going to wrap it up. Take care, everybody.